Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Everybody, welcome back to the Get Real Podcast. Ron Phillips here. I'm pretty excited. I've been excited for a while. I haven't said anything about it. But today, I'm going to talk about it a little bit, even before it's official. I'm on my way to celebrate my 27th wedding anniversary, which is going to be super fun. So headed to the airport. Thought I'd just jump on here real quick. And I don't know if you guys have been following the passage or not passage of the big, beautiful bill. Don't really know whether it is beautiful. I guarantee you it's big. But there is a beautiful part in it. So I thought we should talk about that really briefly today. Again, this is going to be pretty short, but 100% bonus depreciation has passed the House. Yeah, I think a couple of weeks ago, 2 or 3 weeks ago, which is a big, as Joe Biden would say, this is a big effing deal for all real estate investors, but specifically for a couple of different types of people. See if you fall into these categories or can fall into these categories. And first off, let me tell you what bonus depreciation is. So when you depreciate your property, we've talked about this before. You depreciate your property for 27 and a half years if it's a residential property, which is basically what we sell. Commercial properties is not the same. I don't want to talk about commercial properties today, but it's extended for commercial properties. Okay, so 27 and a half years. If you're doing straight line depreciation, which is what almost everybody does, straight line depreciation, you just take the land value out, right? So if you had a $200,000 property and the land value was 20%, you take $40,000 out and you would be depreciating $160,000 over 27 and a half years. You just divide 160,000 divided by 27 and a half. And it'll tell you exactly what your depreciation number is every year. Okay? Super simple. Now, we've talked about cost segregation studies in the past where you take all of the parts of a property and you break them all down. They all have different useful life. So some are 5-year, some are 15-year, some are 27 and a half year. And I think there's even a couple of other breakdowns in there anyway. It's like it's starting to rain, which means it might get a little bit loud. In the event that it does, I apologize. But if you want more details specifically on that, I've got a podcast on. Just look it up. You can search them on getrealestatesuccess.com. You can just search for the topic and it'll come up. You could search for cost segregation. It'll come up. And I did a whole podcast on it. I think I've done a couple of them. That by itself, you can do that anytime. You don't need bonus depreciation to do that. You can do that anytime. Cost segregation moves forward a lot of the depreciation because there's a lot of 5-year and 15-year parts that they just get moved up. What bonus depreciation does in the tax bill, and what this particular part of the big, beautiful bill is, it's just reinstating the original Trump tax incentives, right? Tax breaks. This was one of them. It's sunsetted and it is on to be brought back. So 100% bonus depreciation means that you take all of the 15-year items, you can write them all off, 15-year and under items, you can write them all off in year one. Now that is massive. It's huge. Depending on the property, it can be between 20 and 30%. And for commercial properties, apartments and things like that, it can be even more, depending on the type of property it is. But for our use case, 1 to 4 family residential real estate, probably going to be somewhere between 20 and 30%, which means basically the same amount of money that you put into the property, you get to depreciate off of your taxes year one. It is a huge deal. Now, specifically going back to the two types of people. Number one is a real estate professional. So real estate professionals Well, let me back up a step. There is a cap to the amount of depreciation you can take against passive losses, against passive income and create losses that you can use in the same calendar year. Okay. Unless you're a real estate professional. That's a big deal. Okay. If you're a real estate professional, there's no cap and it crosses over into your personal income. So whatever your job is, whatever your spouse's job is, all of that money can flow. So if you buy 2 or 3 properties and you have additional losses that year, you can use those losses against your ordinary income if you're a real estate professional. And real estate professional status is based on time being a real estate professional. You don't have to have a real estate license or anything like that. It's all based around time. Now, if you have a full-time job and you're claiming real estate professional status, that's going to be pretty tricky. But if one of the two of a married couple is not working full-time and wants to manage and become a real estate professional doing real estate, legitimately doing real estate, it can be huge tax savings for you. And if you are a real estate professional already, this is a really, really big deal. And bonus depreciation also applies to vehicles. If you're in a business that's buying things that you would normally depreciate, bonus depreciation, I think, pertains to a lot of different things, not just real estate. And then the second category of person are people who have, sometimes that's too much. Like if you get 30% depreciation the first year and you only put 20% down, you had 10% left over. If you have passive income from any other investments, passive losses go against passive income. And so you can use those passive losses against other passive income. So get with your CPA and start to understand what this law, once it passes, is. And I believe it will pass. There'll be some changes to it, but I don't think they're going to take this piece out. It's a big deal. It's a really big deal. So start following it. It's in the Senate. Hopefully it'll pass soon, and that'll give all of the, and it's retroactive to the beginning of the year, I believe, as well. So really, really big deal. Start following it, watch it, light your candles, do whatever it is you do. For all of us who love real estate, this is a big, big deal. Did I say that again? I don't know if I said that again. It's a big deal. Now, the rest of the bill, not sure. I haven't really been following it. This is the only piece I've really been tracking. So let me know what you think about it. And in the meantime, if you need to get some real estate for those tax write-offs, you can hit us up at invest@rpcinvest.com. invest@rpcinvest.com. Look forward to talk to you. If you have any ideas about the show, thoughts, comments, send them to me. I check that email, and then as you all know, I do shows on what you guys want. So if you want something specific, let me know what it is. Till next time, get out there and make something happen.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.